right. I think I'm streaming. Hi, guys. Gonna wait a couple of minutes for others to hop on. And I'll go over some of the basics of futures. And then also, most importantly, I think a lot of people have issues with sizing. I think that's kind of how people are blowing up their accounts. So we'll talk into that even more. Okay. Gonna see if AJ is going to be available to hop on to do some show you guys. We've got a journal. It's free. Just how to like work it and stuff. Switch my screen. Entire screen. Let's go to this. While I'm waiting for others to hop on, we can watch what the market's doing. Maybe I should actually, hang on, put up a link. I have to create it. No, there's a few. Let's see. Let's see. Let's see. Finally. Okay. I'm going to be doing lunch hour, guys. More teaching. I don't really trade during the lunch hour just because it tends to be chop and I don't like to give back my profits. So there's nothing here. This is my order flow footprint that I'm sharing right now. You can see we're still in an uptrend. It's holding this red line. Okay. Can you guys type in the chat if you can see my screen and If there's something specific you guys want me to learn or teach. Otherwise, I'll just see what happens to delta here. So for those of you that I know a lot of you have not seen these types of charts. Some of you have, but this is called order flow footprint. People use it differently. I use mine in confluence of my technical analysis. So there's different types of order flow footprints. This one here is from Trade Devils, I think. Yep, Trade Devils. I always get their names mixed up. But basically, I don't need to look inside of each candle what's going on. As you can see, most people do, but this is a very advanced order flow footprint. And it's got these little markers, as you can see, like either on top or on the bottom. So they're called bar markers. And these bar markers show me what's going on inside of the candle without me having to like read exactly what's going on. So, like when we had delta sweep, that was this morning, a few times. See this right here? Let's see. It's a 5-minute candle. Quickly, we went from the pivot point, which is a key level I have, which I've been talking about all day, 584. We had a sweep that came through, went down to 478 in like minutes. See this little X? Yeah. So I don't need to read, like I said, what's inside. This is not a bootleg version of an order flow footprint. And then same thing when we went back up, we grabbed we had an X there. But the way, the first time I started looking at order flow footprint 3 years ago when I was trying to learn it, I'm like, yeah, I'll never learn this time. This looks like matrix. These numbers were going, way too fast. I just didn't know how to do it. I looked online, YouTube, everywhere, and everybody has their own way of using these. So I cut out everything and I just started applying it at like what I use for technical analysis. And then I looked to see what happens exactly, like this is my key level. What happens exactly? We came up, rejected it. We had a delta sweep. I mean, that's a beautiful short. So, same thing. We had another X. We don't get these X's quite a bit, especially on the high, like on the 5-minute. It's typically we'll see it a lot more on the 1 minute. What else do I look for? If I am scalping, I can play with 1-minute candles. The more of these little bar markers it has on top, the more of a like stronger of a move. So let's go to the first candle. Oops. Also on the bottom, I can see what the volume is per candle. I can see what the delta, max delta, minimum delta, you can customize. So that's another thing. This is very customizable, at least for me. So, okay. Did you guys hop on? Is there anybody in here? You can see nothing for just I had to go pick up my son in bed. What are Cater? Yeah. Oh, nice. Blondie the cat and Pete the cat. Okay. Well, I was going to go over the just kind of what I do when we're not busy, just over futures basics, and then kind of delve more into risk management. I think a lot of people they blow their accounts because they are not sized in properly for the account they're trading, and that's what really will blow your account, and it doesn't matter what you're trading. I don't care if you're trading options. I don't care if you're trading equities, futures, crypto. If you're not sized in properly, I mean, your account is going to suffer. So with that said, let me see how many people are on stream over. Oh, this is your new account. Hey, JJ. No sprint chart. Is that what you call it? Uh, oh, yeah, I've been actually using this chart since 22. A lot are just hopping on it. Over the last I think over the last year or so. But I've been the more you look at it, like especially like I said, these signals that appear, it just kind of becomes second nature. It's like it doesn't even um you might not be able to explain to someone what all these little, like, I don't what they mean, but like my brain registers exactly what like I am anticipating of happening, especially like when it's around my key level. So that's kind of I use it on the 1 minute for like entry to see what happens when we were on a key level, and then kind of look at the bigger picture in the 5 minutes to see if we have any delta sweeps and things like that. Any giveaways in this stream? If you want help explaining, just let me know. I'll be happy to help. Do you use this too, JJ? I think. Hang on a second. Hang on a second. Oh, the simple candle chart. Yeah, I use a simple candle chart too, of course. But this is order flow footprint that I use just in Confluence to kind of, it lets me know what's happening inside of a candle. So, like for example, if the volume of trading at the ask price and then the volume of trading at the bid price is delta. So if we have, if traders are executing at the ask price, for example, it's going to indicate, assertive buyers or vice versa. If it's at the bid price, it's going to signify like initiated by assertive sellers. So um, somebody asked cumulative. Oh no, you're fine. We'll do. I'm gonna do the trading thing soon. I gotta put a calendar together with different traders and pull them up here. Um, Somebody said, doesn't cumulative delta give same info as order flow? Cumulative delta is like if you're looking at a bigger picture, over like the certain time, um, it just basically tells you the difference between what people are buying and selling, for each candle or bar. But it just basically shows like the overall balance of buying. I don't use it. It does give you a wider view, over like a whole trading session or a whole trading day. But I just use regular delta. I don't. I mean, I can add it on here. I'd have to go into, where's the footprint? I'm not going to do that right now, but I can add the cumulative delta in there. Okay, let's see. Any giveaway? No giveaways in this stream, but you know what? I'll run a giveaway after. Actually, there's 2 giveaways that are running. Let's see. And I just did some giveaways earlier today. Okay. Oh, there's 2 JJs. No, JJ, this is a different, this one was on Twitter. I think a former institutional trader. All right, I'm gonna go ahead and get started on the futures basics. If you guys have already like gone through this, just know it's basically gonna be similar. I'm not gonna be talking about the charts, just gonna go into like, basics of futures, different instruments, risk management, how you can fund your own accounts. I I've seen a lot of uh, futures traders that have started out with, prop firms or whatever, but they've never, traded their own account, which is fine. I believe a lot are not familiar with it. So when I teach this little webinar thing, I kind of include everything because it's important to know that it's not just futures are, to be traded on with a prop firm. No, you can trade your own account if you're comfortable doing that. So, all right, let me get started. Okay, I just gotta change my screen quickly. Place it. And I will answer questions at the end, guys. So anything, um, this is working. So it's, what? Is Project X down again? Yeah, you can't have this type of a chart on Project X. All right, let me go ahead and get started, okay? And like I said, I'll answer any questions at the end. Please don't hesitate to ask any questions because we have all been um, newbies, whether it's in options, crypto, futures, it doesn't matter. So don't hesitate to ask. There's no dumb question. I promise I won't judge you because I have heard it all. So if you have the question, I bet you anything someone else will have the same one. So let's see. All right, let's get started. All right, so futures 101. So what are futures? So futures trading is basically a contract between a buyer looking to invest and a seller where the contract is made for the future and has an expiration date. In these, there are two participants, so hedgers and speculators. So hedgers protect their assets from risks, and speculators are usually floor traders. So as retail traders, we are considered speculators. Futures contracts are available in 5 different assets, such as like equity index futures, interest rate futures, commodity futures, currency futures, metal futures, and they all have expiration dates. So your broker, whatever you're using, will prompt you automatically to roll over the instrument. So for equity index futures, typically it's on a third Friday of every third month. So E-mini, S&P 500, and NASDAQ, they actually expire quarterly. So it's March, June, September, and December. It's on a third Friday of every third month. Okay. However, if you're trading commodity futures like oil or metal futures like gold, those expire monthly. So like I said, your broker will just prompt you to roll it over. So let's see. Next is, so basically the purpose of this is to teach some of the fundamentals of how futures work, how you can trade them on your own account, and how you can get funded accounts, since I believe that many um, would benefit from adding futures trading to their skill set. So some of the key terminologies that are often used, I'm not going to go over all of them. You guys can find this in, this is free. If you go to propfromtrend.com, and click on the educational resources to follow along. You can come back to this. It's also, yeah, translated in different languages. So um, Spanish, French, Italian, German. I don't even know. Lots of, I think 6 or 7 languages. So anyway, the key terminologies used in this, for example, lot or contract, which is the unit of the instrument. So if I say I'm trading 5 lots of NQ, just means I have 5 contracts of NASDAQ that I'm trading. Tick is the smallest price movement that a futures contract can make. Point is a $1 move or a $1 handle. Globex is an electronic trading platform used for derivative futures and commodity contracts. However, traders also use the term Globex to mean overnight session of the market. So, like when they're trading Asia or London, they'll say, I was trading Globex. And, regular trading hours is specifically, or specific exchange or market center, typically during the New York Stock Exchange Open. So, the rest, margin is the amount of money required to be deposited by a trader to open a futures position. These are all kind of self-explanatory, so I'll just kind of skip along so you guys don't, So most often used, futures are that as retail traders that we trade is like, S&P 500, which is like ES, MES, comparable to SPX SPY, NQ, MNQ, NDX and QQQs, RTYs, IWM, GC for gold, oil. for CL or CL for oil. So first off, the market is essentially futures, and we frequently discuss ES. So the S&P 500 are those. Okay. So although these futures are traded similarly to other derivative, leverage is what they offer above all else. So futures trading is simply a very leveraged form of stock trading. So to contrast with futures on E-mini S&P 500, contract offers roughly 32 to 1 leverage. And because they trade in tick sizes, so for ES, it's 0.25 spread. One contract changes value by $12.50. For every 0.25 it moves. So you gain or lose $50 when ES moves 1 point. So if ES changes 10 points, you either win or lose $500. Okay. Now, if you can see here, NASDAQ, for example, NQ changes value $5 per tick or $20 per point. And ES and NQ, there are 4 ticks in each point. Okay. However, if you're looking at CL or oil, you'll see one CL changes value by $10 per tick or $10 per every 0.01 cent it moves. Each penny is a tick and it's worth $10. So it's $1,000 per point. So there's 100 ticks to make 1 point in CL, whereas like if you're trading ES, there's 4 ticks in a point. So if oil is trading at $60 and it goes from $60 to 61, so that $1 move is actually $1,000 in futures. So that kind of should give you a little bit of an explanation. What I see is that many new traders, whether they're coming from options or brand new, just starting out, they jump straight into ES or NQ, thinking they're just trading futures, when the risk is equivalent to trading the full index value. So they don't realize that trading NQ is like trading NDX, and trading ES is like trading SPX. So most traders should be trading MNQ instead, which is like trading QQQ, or trading MES instead, which is more like trading SPY. Because if you jump in and start trading the big size, especially when your account size says otherwise, just don't do it. You're going to set yourself up for failure. You're going to set yourself up for blowing accounts. And if you are trying to build good habits, if you're trying to make it in trading, you need to size accordingly. Trading hours. Futures market is open 23 hours a day. You must close out your positions by 4:59 p.m. if you're trading like on funded prop firms. It opens Sunday at 6 p.m. and closes Friday at 4:59 p.m. Eastern. The best times to trade are usually during the New York Stock Exchange market open or during European market, which is in the middle of the night. And then you also need to check during holiday, as hours may vary. So like when we had Labor Day weekend, New York Stock Exchange was closed that Monday, but we were open from 6 p.m. Sunday until like 1 p.m. Eastern Monday. So it's not always the same. And let's see. Let me move right along. Okay, so this right here is, this is more like a little cheat sheet where you can see like comprehensive futures contract specifications. You can see the description of each futures contract or instrument. The minimum tick, the tick amount, that the dollar amount. So like I said, S&P 500, ES it moves in 0.25, which is $12.50 per point. If you're looking at micros, which is 1/10 size of it, which is the MES, same thing, it moves at 0.25. However, it's only $1.25 per tick. Same thing if you look at the Russells, if you look at NASDAQ. Down here, if you're looking at gold, a lot of people have been trading gold lately. So you can see the minimum tick, the tick amount. So it's got soybeans, corn, I don't see cattle on here, but I have seen a few trade cattle. So, um, all right. Okay, so basically the distinction is that when you purchase or sell a contract, you're not purchasing ES shares. Therefore, it costs the same amount of money to buy or sell one contract, regardless of the price at which ES is trading, and margin is a term for this. So, if you're using traditional brokers like Interactive Broker or TOS, you need about $23,000 for one single ES contract. But if you or for a micro, which is an MES, it costs roughly $2,347. However, if you are using a broker that specializes in futures, such as NinjaTrader or Tradeovate, AMT's one, I believe Webull also has this option. So, instead of the $23,000 for the traditional brokers, Tradeovate offers, I'll just use Tradeovate as an example, $500 to $1,000 a day trading margin for E-mini contracts. And if you're trading the micros, it's actually even more affordable, which is $50 in the day trading margin. And then MNQ is like $100. Let's see. So what do I mean by day trade margin? So Tradeovate offers reduced margins for both the day session as well as the overnight session. And basically, what that means is that the intraday margin, which is this right here, if you see this column, it says 500, 1,000. It's available from 6 p.m. Eastern until 4:45 p.m. Eastern the following day. So almost 23 hours. So if you're trading your own money, you can, use the day margin. If you're wanting to swing, so let's say you want to swing a position over the weekend, then you need to have the initial margin, which just one contract is for NQ is $33,000. So if you're using the micros, MES is $50, and if you're wanting to swing, you would have to look at the initial margin. Let's see. I think it's account minimum is only $250 to open a Tradeovate account, which is one of the lowest in the industry. There are a few other ones. You guys, I've been sharing my order flow footprint. No, wait. Oh. Sorry, guys. I am on like multiple streams, and it appears that in Discord, I am streaming order flow footprint while over here, I am, hang on. Uh-oh. Well, Concord, thanks for letting me know 15 minutes later. There we go. All right. Sorry, guys. Okay, so this is, you can go back through and if you just go to the website, click on the education and futures trading basics and just click through these slides. So third way of getting funding or trading futures is through prop firms. So one way is to utilize a finance partner, also known as, like Tradeify, Apex Trader, Take Profit Trader, the Futures Desk, Top Step, My Funded Futures. There's many. There's, I think, like 80 different prop firms. I have vetted about 20 of them. A lot of new ones are coming on the market. So, but just to give you an example of a few different, firms. So Tradeify has a 1-day pass, whereas Top Step has a 2-day minimum evaluation where you can be funded in as little as 2 days. Okay, so how does this work? So this right here is going to be from just from Apex, but you demonstrate to the prop firm that you are a successful trader and you must pay to enter the evaluation, which is a STEM account. Okay, so if you succeed, you will then be given a funded account to trade. and you pay the activation fee. Also, some firms don't even have any activation fees. It just depends on accounts and on the prop firm. You keep all of the proceeds up to $25,000, and that you keep 90% of the profit after the first $25,000 you earn, while they keep 10%. So you want to see the prop firm rules with whatever prop firm you're utilizing, but a lot of them are similar with the profit split. Some people will get multiple accounts when on discount so that they can trade them at the same time. And there's a trade copier you can use for each. And each account must pass the performance evaluation as they are all standalone accounts. And I think there's been probably it's gone viral, obviously, over the past couple of days about a trader that made 1.7 million trading prop firms in 3 days. And that was not on one account. So he had 5 accounts that he was trade copying. And so that was the total of all of the accounts. Okay. Why would someone want to do trade copying? Well, you're spreading out risk between different accounts. I would not suggest anyone who is bringing you a futures or whatever to buy multiple accounts. I mean, your best bet is to, if you are wanting to go down that route, is to just get one account. Play on this the sim account that you get with it, and then pass the account first before you're jumping in and taking on extra accounts. It is one click, one chart, and it just duplicates it into your accounts, and it's great when you're green, but it's also a way you can blow all of your accounts, so it kind of goes together. So now, is this too good to be true? Not really. Most traders fail due to lack of discipline. And this is how these companies make money. So um, if I know hundreds of different people that have pulled money out, from prop firms, um, but at the same time, they are consistent and they are disciplined. Um, if you can trade the chart, if you're charting SPY, if you're charting QQQ, it's pretty much the same thing. ES, it's S&P 500, or NASDAQ, QQQ, NQ. The worst that can happen is that you lose your account evaluation fee. You do not pay back any capital. So you can also take these evaluations, as many times as you want. It's not like just once and that's it. But if you're just wanting to test it out, you can go to like tradeovate.com or ninjatrader.com, and I think they've got like some free demo accounts you can test out. Or if you want to test a prop firm, although they have tight regulations, you're essentially forced to have good habits by these rules. Okay, so why prop firm versus trading your own money? This is from Take Profit Trader. So basically, simply put, most traders are undercapitalized, and it's also leverage. So you level the playing field by using their accounts, not your own funds. And trading your own funds can lead to severe losses. However, with the prop firm, your losses are limited to your associated challenge fees. All technology and account setup is done by them. No more documentation and painful, account setup experiences. And also lack of discipline haunts traders, but the risk management system and rules will make sure you stay disciplined during the trades. A lot of these firms have similar, I'll just kind of pull this down, but when it comes to, the rules as far as like meeting the profit. So for example, this is Apex, but your profit goal is $3,000 for a 50K account. Your trailing threshold drawdown is $2,500. So if you don't go below your $2,500 and you make $3,000 in profit, that is, you will pass your account. Top Step, same thing, except the difference with Top Step is that they have a consistency. during the evaluation. So, for example, if you are trading a 50K account, notice the profit target is $3,000. The drawdown is 2,000 compared to Apex 2,500. And your profit your best day needs to be below 50% of your total profits made. And I'll kind of go into that in a calculator and show you guys what I mean by that. But same thing with other, different, like for example, take Profit Trader, they offer similar stuff, as far as like meeting the profits. They have a 5-day pass. It takes you 5 days to, for evaluation. However, once you pass, they have a daily withdrawal. So if you meet the threshold, you're able to withdraw daily. FuturesDesk has the same thing as far as daily withdrawal. They also have one of the best static accounts. And one thing I have not talked about is an account Tradeify offers. It's called Straight to Stem Funded or Lightning account. Basically, you instead of taking the evaluation, which they have evaluation if you look up here where it says advanced or growth. So instead of these accounts, you go straight to Stem Funded, and you don't need to pass anything. Whatever you make in your Lightning account, you get to keep as long as you don't breach your drawdown, and you stick to their rules. So which they've got a consistency during that phase. And let's see. Okay, so here, this is very important. A lot of people miss this when they're looking into trading, when they're looking at trading futures. I get a lot of questions like, hey, I failed my account. Why? I was in profit. Well, it's because of the drawdown. There's different types of drawdown. Okay, so one, what is a drawdown? So drawdown is the maximum loss you're allowed to have before your account gets breached. So understanding how it's calculated is crucial for risk management and choosing the right prop firm approach. So we're all different types of traders, right? For example, I am a scalper, day trader. I'm not really a swing trader, whereas like some of my analysts are swing traders or more day traders and they hold all day. Okay, so the intraday trailing, how it works, your drawdown limit moves up with your balance and unrealized gains throughout the day, but it resets to the daily starting balance each day. So how does that work? So let's say you have a 50K account with 6% drawdown. You start your day at 50,000. Your drawdown is 47,000. At 10 a.m., you make $500 profit, which is 50,500. Your drawdown moves to 47,500. And at 11 a.m., you make another $300, which it moves up to 50,800. Now your drawdown moves to 47,800, which is the $3,000 behind that balance. Okay, let's say at 1 p.m. you open a position with $600 unrealized gain. So now you're up at 51,400 unrealized. Your drawdown trails unrealized gains at 48,400. 2 p.m., you close your position for $400 realized profit, which you're at 51,200. Your drawdown is going to stay at 51,400, which is that $3,000 behind that unrealized gain. Even though you didn't, realize it, you didn't take profit, it still does not go down. Okay. Let's say at 3 p.m. you lose $400. So you're at 50,800. Your drawdown is going to continue to stay at 48,400. It's not going to go down. So you end up having a remaining drawdown of $2,400. Okay. Your next day, you start out with 50,800. Your drawdown is 48,400, which you've got about $2,400 left in drawdown. This is good for those that are they take base hits or are scalpers. You don't wait for your position to come back to your entry, that kind of a thing. End of day trailing,
how that works. Your account limit or your drawdown limit only moves up based on your ending balance at the close of each trading day. So for example, a 50K account, same thing, 3K drawdown. Your day one starts at 50,000, drawdown is 47,000, which is $3,000 in total drawdown available. During the day, up to 51,500, then down to 50,800, your drawdown is still going to stay at 47,000 all day. So your drawdown stays fixed all day. Let's say day one, you close at 50,800, your drawdown updates to 47,800 at the end of the day. So when you start your day two, your drawdown then moves, which is 47,800, which is 3,000 from new starting balance. The third one, which is probably a favorite of of many of us, if you can find a good static drawdown account. So how does that work? So your drawdown limit is fixed based on your starting account balance and never changes. So 50K account with a 3K drawdown. Account starts at 50,000. Drawdown is 47,000. Let's say week one, you grow to 55,000. Your drawdown's still going to stay at 47,000. Month one, you grow to 60,000. Your drawdown stays at 47,000. Month six, your account is at 75,000. Your drawdown is still 47,000. However, a reality check, you can lose $28,000. If you lose that, you can still breach the account. Okay. One of my favorite is from the the Futures Desk. They have a $6,000 static drawdown. So to me, that's a no-brainer. Let's see. Here you guys can, look at the valuation rules, payout rules, and kind of compare. If you go into, detailed analysis, let's say you just want to check account or static accounts or just end of day, you can, go through the drawdown. You can select different firms and see what they all have. If they have activation fees, if they don't. So like I said, the Futures Desk, they've got a static account and zero activation fee. So you can just kind of scroll, to the right, and it will tell you like with the withdrawals, all of that kind of thing. Let's say we go to here. It's going to give you, this is Funded Futures Network. It's a different firm. This one does not have static. I clicked on the wrong one, but that's okay. So here you just basically, it's more of a condensed version of like, their plan comparison, what kind of accounts they've got, what platforms they have, that kind of a thing, the payout structure. So it's just more of like a condensed version. And then you can also obviously click on there and go to their website and it will kind of give you all of the, yeah, they've got that 50% BOGO with no activation fee. Buy one and get one free. Okay, let's see. Whoops. Nope. No. Wrong one. Trading resources. Back. Click. Back through. Oh, okay. So here's a calculator. So when I was talking about the consistency, for example, where like Top Step, for example, has that 50%. So let's say that your overall profit is $3,000. Whoops, not 30. And let's say you made $1,800 in one day, okay? You would be at 60%, which is over that best day percent of total profit. So either you would have to make more, let's say, I don't know, $4,500, you would be under the 50%, or not have your best day go above 1,500 because it's going to be 50% or less. Okay, that's what that means. Also, if you want to compare different firms, you guys can do that, you can go and add Tradeify, for example, growth. So you can see here, it gives you the profit target, the drawdown amount. You can include the activation fee, which for this account, there's none. Click there and you go to Top Step. Same thing. The original price is $49. The profit target is $3,000. Drawdown is $2,000. If you want to include the activation fee of $149, it actually comes out to be $198. So Tradeify is it comes in at 97. Okay. You can also compare same firm, different accounts, and see like with the discount or whatever. A 100K account might be a better deal than a 50K account. The higher number accounts, so like 100K, 150K, they give you more of a drawdown. I'm just using 50K as an example, but you really have more leg room when you're trading the bigger accounts. I personally don't trade the smaller accounts, but when you get started, a smaller account is fine too, as long as you know how to size, okay? So if you go to Trading Psychology, which you can kind of check out your mental state, and I know a lot of traders will say, don't be, no emotions, you're not supposed to be emotional. Well, at the end of the day, we're human. And, being fearful or greedy or vengeful or impatient, whatever it is, those are all emotions. And as humans, we kind of have emotions, right? You can kind of play around with that and get your bias check. If you are, let's say, I don't know, it's going to tell you you're at a high risk. Consider not trading today if you're feeling, some type of way. But here is what I want to show you guys. It's this risk setup. And this is where a lot of traders fail as far as not sizing incorrectly, okay? So let's say you get a 50K account, just $2,000 drawdown, okay? Typically per position, your risk should be 2 to 3%. 5% only if you have like a high conviction setup with strong edge. But let's just say we are going to do 2%. I'm just going to use random numbers. So 26,000 entry price, and let's say $26,010. So $10 stop loss, which is very tight for NQ or for MNQ. But it basically tells you for your type of an account to use micros, which is you're risking $40 per position. If you are, risking more, you have a good setup, then it's 5 contracts, 5 micros. What I see and what I've seen over the years, and whenever I ask anybody and whenever I talk to the prop firm CEOs, how do people blow their accounts? Well, it's because they go using NQ, and basically they're full porting. They're using way too many. It's account destruction zone. Your risk. It's a 15% risk. You're basically gambling. You're not trading. 5 losing trades, your 50% or more of your account is gone. 7 losing trades, your account is likely destroyed. And this is where you need to figure out, maybe you have a $5,000 drawdown. Now it gives you, if you're wanting to risk 15%, let's say you want to do 5%, it's going to just tell you to do 1 contract of NQ. So you just, people are trading gold. I see people getting into trading gold without knowing what gold even moves at, without knowing how many ticks, how many points. Let's just do 4,100. 4110. Basically, 0 contracts if you're trying to calculate it on that. Even at 15%, 0 contracts because it's $100 per point. Now, if you had a $50,000 account, then it's 7 contracts. But I see, and I think others do too, people are using, I mean, look, 5% of a 50K account. And when I say $50,000, I'm talking about the draw. Let's say your drawdown was $50,000, or you had a cash, you've got cash of 50 grand, and not the prop firm account size, because you can only use the drawdown amount, right? So how do people blow these accounts is oversizing, and there's no, it's not the prop firm, it's not this, it's not that, it is this, okay? 90% fail because of sizing. So if anybody tells you differently, tell them to come to me and talk to me. We'll see. So here, you guys, this is a trading journal. This is free. All of this, everything I'm showing you guys is free in here. There's no credit card required, anything like that, okay? So, play around with it, get educated. If you are wanting to make a career out of trading, then you need to learn, you need to know, you need to keep learning, keep growing and everything. So for example, here's like a trading growth calculator. It's in the journal suite. So I don't know, let's just say, one thing what's important is understanding the risk to reward ratio. If you risk $500 to make $1,000 per day, with that ratio, all you need is a 33% win rate to break even. Anything above that is profit, okay? If you are risking, I see this all the time, people will risk 2 grand to make $200. That is a horrible example. So, some are risking 3% to make 1%. You need a 75% plus win rate to do that. So good risk to reward ratio, if you've got a 50% hit rate or whatever, is your wins need to be bigger than your losses. So, okay, so another thing that I do when I trade in the morning, the first thing actually is I look at the trading economics calendar. Some prop firms, and even like if you are using intraday margin of your own, if you're utilizing your own capital, they don't allow news. Some will not allow news trading, or the margin might be more for trading like CPI or FOMC or something like that. So, you go in here and check out the economics calendar, Forex Factory, the red folders, if we've got earnings, such as like, at the end of we've got NVIDIA or Microsoft or whatever it is, right? You want to be aware of what's coming out that day. If you happen to be trading NASDAQ, I don't know, at 3:30 or 4:30 in the afternoon, and, NVIDIA just reported or whatever, you might be out of your position. But also check like the news feeds, bar chart, Benzinga, whatever, Financial Juice, investing.com. I'm sure there's a lot of different financial news that you guys can check that out. Oh, also you can go down here. There's strategy setups, risk management, technical analysis, all of that kind of stuff. Let me go back to this thing so I can show you guys how what some of the platforms look like. And then I'm going to execute some trades on a sim account just to show you guys like how it moves. Okay, so oopsie. Okay, this right here is called Project X platform. If you're if you're trading with Top Step, it's going to be called like Top Step X, or if you're looking at the futures desk, it might be like TFDX or something like that. That's this platform. It looks like TradingView. You would input the instrument up here, and then just kind of I wouldn't chart on this. You can use your own, like whether you're using TradingView, whether you're using TOS for charting. but this is where you would execute your trades. So if we're going long, if we think the market is going up, we would buy or join bid. If we think the market is coming down and we want to short it, then we would sell market or join ask. You can flatten them all. So you can also change the number of contracts up here, things like that. Fairly simple, easy to explain. Also, there's like a little settings button here. You can add different types of risk management to your account. So let's say you don't want to lose more than, I don't know, $1,000 a day. You can lock yourself. So as soon as that hits, you will lock yourself out and you cannot go back in and trade that account until the next day. Okay. You don't breach anything. This is just for your own like risk management security type of thing. I always suggest that no matter what you're trading, that you always have a hard stop loss when you're trading futures. It's not like trading options. So if you can always move your stop loss, whether you're trailing or whatever it is. But we've all seen big candles come through, news candle in milliseconds, it's like 40, 50, 60 points down. And if you didn't have a stop loss, well, you could be liquidated, or auto liquidated, especially if you don't have much of a drawdown left. So, use a stop loss, play around with it and see what works for you with your entries and exits and things like that. This is NinjaTrader platform. This is what I used. I prefer the NinjaTrader only because I can add my order flow footprint, which is this, and I can see within the candle, what's going on, that kind of a thing. That is not available in Project X, and it's but most people don't use this, so you don't have to worry about that by any means. The same thing if we're going long, buy market, join bid. If we're going short, sell market, join ask, close all, flatten, things like that. And then this next one is called Tradeovate platform. Same thing, simple stuff, guys, where you would execute your trades. And let's see. Okay, so basically the key takeaway is that, just do your due diligence when you are, looking at any prop firms, or whether you're looking for using your own money at a broker or whatever it is. You need to know how to chart, just like you would, with SPY or QQQ. There's no, it's unlike options. There's no IV, there's no theta, no Greeks basically. It's just based on price action. So while some consider this easier than options, it is in respect to there's no Greeks. However, most of us struggle with risk management, FOMO mindset, that kind of a thing. And that's where, we kind of mess up. But right here, let's see, I'm going to go to Sim. Actually, I'm going to go on both of these. Okay, there we go. All right, so this here on the left side, this is a NQ. I only have one firm connected on here, but this on the right is MNQ. This is the micros, okay? So let's say I'm just going to use one contract. And I've got a 50, on this one I've got a 50 tick stop loss, and this one I've got a 40 tick. So let's say I think the market is going to come down. I want to take a short, okay? So I'm just going to, in this example, I'll enter sell market. Okay, so 1 point. Okay, so each point, as you can see here, Notice how the spread moves in 0.25. So it's 0.00, 0.25, 0.50, 0.75. Each, that's a tick, okay? So, but each dollar that it moves is 20 bucks, okay? So on the right side, these are points, but instead, this is the micro. This is what I'm talking about when you get started. It moves the same way, okay? 0.25 is the tick, and notice how the risk, I mean, obviously, yes, the profit is going to be a lot more if you're taking NQ, the full size position, but same thing, you can add more contracts to this, if you are wanting to do that. And then here, I'm going to do ES. If I can find it. Chart Trader, let's do ES. So on the left side, okay. Same thing, it moves in 0.25, okay? So it moves by quarter. Let's say I want to go long, just, moves in the 0.25. Each point is $50. So if it goes from 6876.50 up to 6877.50, I'm going to make 50 bucks. Okay. ES is not as volatile as NQ. You guys have probably seen a lot of people trade NQ. It is a lot more volatile. So I'm just going to close these. And then MES, which is the micro version, kind of what I just talked about. There's MNQ, MES, ES. So it's $1.25 instead of $12.50 per each point. And that's it. I mean, if I'm going long, I'm gonna, buy bid, whatever. If I'm going short, it's gonna be sell ask, sell market, whatever I'm looking at. That's it, guys. It's not a rocket science by any means. Let's see. Oh, I didn't even see you. Hey, AJ. Okay, guys. So I'm gonna have my friend AJ join me up here, and he's gonna go over a journal that's part of, like, it's free. It's in the prop firm trend, and he's gonna show you guys some of the things that is available. So, hey AJ.
Hey, how's it going?
Yeah.
Cool. Let me share my screen. Are you pretty much done with what you were kind of going to go through?
Yep, I'm done with what I was going through.
Okay, cool.
Let me see how the heck. Microphone. Yeah, okay. Are you able? Okay, there's your screen. Okay. Whoops. What was I gonna say? I don't know if you want to share it on your Twitter as well. You should be able to just copy the. Oh God, I'm trying to think. I keep forgetting how it's done.
I have like 5 followers on there.
You have 5 followers. Okay.
Yeah.
All right, guys. Give AJ a follow. He's actually a really good trader.
No one's gonna miss it if I don't post it, so I think we should be good.
All right. I'll mute myself, okay?
All right, sounds good. Yeah, so if you guys were here for the entirety of what Minx was saying is, you got to play the prop firm game. You got to play within their rules. And then you also have to have your own rules that you kind of follow and sort of use to guide you. And I think the best thing to do is to start journaling, right? When I started futures with Minx and a couple other folks, it was just kind of like, yeah, I'm not going to take the time to write down in a journal and like write my trades and just reflect on how I was like feeling. It just wasn't a thing for me. And it's sort of, that helps you get by. But over the last like 4 months, I think I went like 3 months without a payout. And, I couldn't really put like pinpoint what exactly my issues was. So what I did is I started building out the platform that you guys see in front of you. Named it Insight Trades just because it kind of just needed a name. I was kind of just using it on my own, and it sort of has helped me kind of just understand the trades that I was taking, the trade location of where am I taking those trades, and just sort of getting like real time feedback. So this is the overall dashboard. It's not going to be anything different from any other journal platform out there. It's going to tell you your most profitable days, what you're actually doing well, direction of your trades, your best trade, your worst trade. So all of this is already available within your guys' prop firm or anywhere else that you are actually trading with. The thing that I think actually sets this app apart, and I use it daily, is the ability to have a pre-market analysis recording. So I come in here every day. My analysis is very simple. I look for big key levels and I wait for one of those to fall into my support or resistance levels, and then I just take a trade, right? So what I do every morning is I come in here, I record myself just before the market opens, whether it's 30 minutes, 15 minutes. My videos don't go longer than 15 to 30 minutes, and then I lay out my plan. So as I'm speaking through the charts and I'm going through my pre-market analysis, once you actually are done, our system on the back end can use AI to then just pull out every level that you call out, what you call each one of those levels. So if I'm going over like Globex high, Globex low, I have a 21-day support level, whatever it is that I'm kind of walking through in that trade plan, it marks all those levels for you. Now, if it didn't catch it quite right, it's actually really accurate. Like I haven't had to come in here and adjust the levels. But if you did ever have to, it's really easy. You can come in and just edit the levels. If you missed one, you can just add a particular level into this chart, and then that trade plan sort of gets saved. Conditional scenarios is really just exit and entry. So it's understanding of like what you're expecting price to do, and then what you plan to do when that price gets there, right? So if for example, NQ is pulling back between 550 560 area, I'm looking for entries for longs. If I'm looking to break above VWAP, then I'm going to target the Globex highs on the day. It also breaks down the full sort of analysis. It tries to break it down. If you're like me, you kind of jump around from ticker to ticker, or like you just kind of go in a little bit of a circle when you're looking at your chart of like things that can happen. This sort of just kind of takes everything you say and it kind of just lays it out like in a way that is just kind of like top to bottom, just makes sense on what you're trying to do. And now that you've set up your sort of trade plan, you have your trading plan, what you're looking for, the types of setups that you mentioned in the actual pre-market, you can then move over to the live trading session. I traded for about an hour and 18 minutes. So like the extent that like we can break down long videos, whether you're trading for 30 minutes, whether you're waiting for, whether you're trading for 4 hours and waiting for a setup, we do really well on like breaking down those videos and then being able to extract a lot of that data out. So then at the beginning of the day, before you start recording, right, what you're going to have is your trade plan in front of you, and you just have to stay on the screen. You just set up and record. I can record my top step chart. I can record my TOS chart, whatever it is that you actually want to do, or what you want to show the screen for you to go back and look at. It will sort of just record it for you. And then this video just sort of lives inside of the platform where you can go back, you can review it, you can download it and upload it to, a Discord or a YouTube channel if you want to post it after the live trading session. And then you're able to just look at the trade plan, discuss everything that you are doing, and then just go ahead and just, execute on your chart. Once you actually, so I've already gone into my Top Step accounts, and I just they're already connected to the API. So all I did is just sync all of my accounts. take a second. It's going to give me a message saying all of them were imported. Everything else is a duplicate trade. And then I have everything that I need from like a trading setup, right? It tells me all of my 5 funded accounts, the commission that I paid, the gross P&L. And now I can go continue back into my live trading. You'll see the execution, the symbols that I traded, and then live session analysis. So it breaks down that video. Right now, it was limited to 3 key moments. This was the longest that I had recorded. So I actually expanded this out to take at least 1 key moment every 3 minutes. And if there's nothing or there's just dead time, to just skip that 3-minute window. So I'm gonna rerun the analysis, and it's going to kind of add in additional key moments, additional emotional journeys. It will take things that you say on the video, and it'll just say like, oh, expressed a little bit of frustration over missing a trade, the time frame that you actually say it on, and then accepting that no trade is the best trade. Kind of like as a self-talk, it understands like what you're trying to do and what your emotions are as you're going through that trading session. I recently added up an additional way to look at this. So there's another version of this where if I want to share my Top Step account again, right now it's sharing Top Step, and what's going on is like, okay, well, this is Power Hour, right? So we traded the New York Open. That's the first one. We can go into Power Hour if you trade London, if you take Tokyo, and then what will happen is I won't hit record because I don't want it to mess up the stream. But what will happen is you'll just get a secondary video and a separate breakdown. So if I could just go to yesterday's date, right? It'll take a second to load. And then I was just kind of playing around with it. So I got the New York session. I have the mid-morning. I have the Power Hour session. And then I just played around with it. You know, it's 30 seconds, but then you have like the London, and then you have another London session that I called it. So it's pretty intuitive in the way that it can kind of just record those videos and sort of call them out as they come within that trade. The last part here is the post-market review. So because I haven't gone in and actually journaled those trades, it looks like the planned setups weren't used. But what I would have to then go do is look at my trades for these funded accounts. And you can see a lot of these are sort of the same account, right? So if I wanted to just group journal some of these here, I can assign them a setup. We'll call it opening range breakout, and then just assign it to those trades. And then we'll be able to see in that post-market review everything that we're doing. And the reason it's taking so long is because we group journaled 80 of the trades just because I wanted all of them to be filled in. Let me cancel this and see. All right, so some of them got traded. Let's see here. Just log this one. Group journal 1, opening range breakout. So it looks like all of those went through. You'll see all of them are going to have the exact same trade setup. Cool. And then one thing we recently did too is like, if you're like me and you're taking like 2 to 3 NQ, or you're taking 15 MNQ, there's a way to group partials, right? So the way that Tradevate and a lot of these other firms, they consider each execution a trade, whereas like it's gonna look like you're doing a whole lot more trades if you don't group them together. So if I'm taking 15 MNQ and then I'm scaling out 5, 5, 5 option, what you can do is you can actually have that be considered one trade, right? Because you're taking one entry and then you're scaling out as it's going in your favor. We can group it so that it's in one trade. If you take off this method, then you just get the exact same thing that you're getting on like Tradovate or on Project X. And if you click on that, you'll get a little bit more of an example of what's going on. But let's just drop back to the post-market review. You'll see the symbols that we traded, the setups, what the plan was, the execution, and then you get sort of an emotional journey of like what you actually went through throughout that trading journey. And then the session debrief. If you're trading multiple sessions, you'll get like a debrief on how that 2 hour went. If you're coming back in the mid morning, and then if you're trading power hour, you'll get a separate sort of analysis of what actually happened during that time frame. I'll tell you what went well, and then some areas for improvement. Again, I haven't gone through each one of the trades to just kind of go and use the exact one, but I actually did use the VWAP bounce. I did use support and resistance, and I used the Globex low. A lot of the levels that I actually executed on today, it was right to the plan, and actually followed my plan almost to a T today. Half of it was because I was Top Step TV probably and wasn't over trading, but yeah, this is kind of what really kind of sets us apart. It really is something that we like to kind of show, and it kind of keeps you honest, right? Like if you're planning on pre-market and your conditional analysis is this, and you're doing something totally different when it comes to live trading, it's going to call you out on it. It's going to let you know like, hey, like you did not execute anywhere close to what you were going to do. And yeah, we're building out some real-time stuff too. We just signed a vendor partnership agreement with NinjaTrader where we're going to be getting real-time live data, so that in addition to just seeing like, you know, for example, like if I just go look at one of my trades here, right, I made 780, but let's say this trade I think was almost like not green at all. I bought it on a retest, but let's say, hey, you made 780, but you also took like $1,500 in risk, like in drawdown. It's like it's gonna be able to tell you like, hey, by the way, like yeah, you ended up green, but you took X amount of heat on this play, and it's probably you should have got out and then re-entered somewhere. It's something that we are working with NinjaTrader on to like figure out how we can get that data and then populate it onto the trade journal to like understand when they took it. So we do have like a live trading chart that we're going to be trying to implement pretty soon, in addition to just uploading a screenshot, which is super simple. I can just kind of come in here, upload the screenshot, and then it'll just be part of that trade. The goal is to use some of that live data that we're going to be getting from NinjaTrader as part of the partnership, and then be able to recreate that trade in real time with like the execution, the exit, and then have the AI on the back end be able to see the amount of drawdown that we actually took on that trade, and then it will sort of help you grade that trade a little bit better. Right now, like, you know, you can go in here and just give yourself an A+ on all of these. But the goal is to use a little bit more technology to understand how much drawdown you took, you know, where a better entry might have been, and then be able to like kind of regrade that trade for you. So I know I went over a lot there. Everything else is pretty basic. Like you can get it with like any other software out there. So I won't go into a lot of these, but just refresh this page. Okay, one sec here. See if I can get this to populate here. Yeah, not sure why that's not working, but ideally it's all of the exact same stuff that anyone would offer, is like cumulative P&L over time, performance heat map, analysis. Let me pull something up really quick. I think I might just be on a refresh server here. One sec. Yeah, weird. It's not showing up there for me either. Yeah, I'm not seeing my screen up here, Minx. Weird.
Hang on, because I'm not seeing mine either. Just a second.
I'm
I don't
seeing
even know
like
where you are. I don't show you.
I'm just seeing like an endless screen of your thing coming by.
Okay, you gotta share your screen. Because it doesn't show that you're sharing any screens.
Let me see here. One sec. Let me pull this back up. Hold on. It just says I'm getting an error saying screen unable to share screen sharing not allowed.
What the hell? No, you should be able to.
Hold on. Let me.
Show non-video settings.
Yeah, I'm getting like a yellow.
Hang on. Hold on. Okay, I think you should be able to do it now.
Try one more time.
Hang on. To show. Yeah, it gives you permission to control the presentation, which is weird. Maybe I need to unhide my. No. I don't know. Maybe there's something with Restream.
That's okay. I think the main thing I wanted to show was like that pre-market prep, especially for like this beginner group, is going through that pre-market prep, getting used to like looking at your levels and then executing and then looking at that post-market. But all the other stuff, they can just go in and like load up like any account that they have.
Yeah.
They should be able to just kind of see what's available.
Yeah, I'm not sure why it's not allowing you to share. I didn't change anything. All right. Well, I'm not sure why I don't show anything on my stuff, you guys, so I don't. Do you guys have any questions for either of us? Let's see. You trade only NQ? Yeah, most do. Yeah. Let's see. All right. Well, I don't see any questions from you guys, so I'm gonna go. Have a
wonderful day.